Want to know how to depreciate a granny flat? Make sure you keep watching. Hi everyone, Tuan Duong, founder of DuoTax, here for another video designed to help you become a better property investor. In this video, I'm going to show you everything you need to know about claiming depreciation on your granny flat. Property prices are rising, so it's easy to understand why investing in granny flats has become a popular investment strategy. They offer the opportunity to start investing without breaking the bank. It could add value to an existing property if you're building it on your existing land or other investment properties. Just like other investment properties, if you're generating rental income from your granny flat, you can claim significant tax deductions, including depreciation. So in this video, I'm going to show you everything you need to know about claiming depreciation on a granny flat. Stick around to find out how easy it can be. But before we get into it, we want to be clear that this video is for informational purposes only. In no way should you interpret this as tax advice. We always recommend working with a qualified accountant or tax agent to give you the best advice for your situation. Granny flats are a great investment because they can provide you with a dual income. If you're adding a granny flat to an existing investment property, you'll potentially be getting two sources of income. And as long as you're pulling income from that granny flat, you can claim a whole list of tax deductions. For example, if you're the one responsible for paying the water, electricity, and gas, you can claim these as expenses as a tax deduction. You could also claim a deduction if you do any of the work on the granny flat to maintain it. To find out more about the tax deductions you can claim, check out our video that covers 17 tax deductions you can claim on your investment property. But by far, the most significant tax deduction you can claim is through a tax depreciation schedule. Depreciation simply means that your property and its assets are subject to normal wear and tear each year. Luckily, the ATO lets investors claim a tax deduction for this loss in value, which is great. It's a non-cash deduction, which means that you aren't paying anything up front for this deduction out of your own pocket. But it can be claimed over time and offset against your taxable income, which means you'll be paying less tax. You can claim it on two types of assets: capital work assets and plant and equipment assets. Your plant and equipment assets, or Division 40 assets, are things like your window blinds, dishwashers, and other kitchen assets such as your ovens and cooktops. You can claim these over this effective life. Your capital work assets, or Division 43 assets, will be things like the flooring, retaining walls, and fences. You can claim these at a rate of 2.5% over 40 years from the date of construction. Granny flats often attract high amounts of depreciation because you can claim depreciation on the areas that the granny flat shares with your home. For example, you could claim the pool or a patio if the tenant has access to these assets. But you'll have to keep in mind that if you're renting out the granny flat and occupying the other property, you'd have to apportion the depreciation deductions for the shared spaces based on what your rental expenses are. So, if the tenant only uses the pool on weekends in the summer months, you'll have to apportion your claim to only account for that time. But if the granny flat is on the property of another investment property, then you can claim deductions on at least 2 bathrooms, 2 kitchens, and sometimes even 2 laundries. So, if you're thinking about investing in a granny flat or you already have one, you want to make sure you get your hands on a depreciation schedule to claim these deductions because it can significantly reduce your taxable income and help you realize a positive cash flow on your granny flat investment sooner. The purpose of a depreciation schedule is to outline the value of both your Division 40 and Division 43 assets, as well as how much it has depreciated and will depreciate over time. This will give you a clear idea of how much you can claim. All you need to do is follow these 3 simple steps. Step 1, get in touch with our team at DuoTax today and we will ask you a few simple questions to see if your granny flat qualifies for depreciation. Step 2, you can order a depreciation schedule over the phone or via our online order form and we will begin preparing your depreciation schedule. And step 3, within 5 to 10 business days, your personalized tax depreciation schedule will be delivered to you and your accountant and you can start saving. I hope this video was helpful and that you better understand the benefits of claiming depreciation deductions. Make sure to take advantage of all of them and check out our YouTube channel to subscribe for more property investment tips. I'm Tuan Duong from DuoTax. I'll see you next time.